Hi. This session, we will learn that how to evaluate a particular business. Valuation, everyone knows that, but whether we are buying something which is undervalued or worth to hold or not, that we don't look at. When we come in stock market, straightly we go in a financial and we look at different aspect of that particular business, ratios and all, and then we are clueless sometimes, some point of time that how to actually evaluate that we are holding an undervalued business. As I already conveyed all of you that when our government policy is in favor of a sector, money will also flow to that particular sector. We are also in a money market. So what you need to know that in future, what money will come in particular sector where government is in favor, you don't know. So instead of too much working on a future projection, as of now, if you work on, as of now, whatever you are buying, whether it is a worth to hold or not, then few more thing which we can predict projects every time you cannot project. I'm just talking about a mid and small cap stock and a large cap stock even, where you can get all the information. But in case of a micro cap stock or nano cap stock, you may not have all the information and access. So then in that time, how to do a evaluation and how to evaluate that particular business. Even if you have collect few information, I'll guide you how we can get all the dots connected and how we can evaluate even a micro and nano cap businesses. But let's move on that instead of going in financial, how means if I give a real life example, say the deal is happening between you and me. I'm having a particular hotel. 1 second. Say I have a hotel in Goa. I want to sell this hotel and you want to buy it. Your name is A. So I'm asking that my hotel price is say 100 lakhs or 100 CR. Let's take 100 CR. That I'm selling my hotel at 100 CR. He will come. You are having worth. So whether at this point will you interested to give straight hundreds here that if I present you my hotel price is hundreds here and I want to sell it and you have worth of rupees whatever 500 600 here. So will you straight away give me hundreds here? The answer is no. You will ask few questions to me. One, first, what is your revenue through occupancy? Yeah. Second, what is your net profit and operating profit? These are the two questions definitely you are going to do me. Yeah. Say if I convey you my top line is when sales is 10 year and profit is 1 year. Now as an investor, whenever you invest anywhere in any business, your always point of view is that how fast you are recovering your this initial investment. when you are coming at your break even point. Say you are investing hundreds here. So your objective is to get as early as possible. The company which are growing at 100% pace, say profit is 1 crore, then incremental revenue maybe 1.5 crore or 2 crore. So main objective is because you are investing 100 crore. So you should get back that particular amount also, and then you can hold this business for your lifetime or anywhere. So, but your main objective is to get back the money first. How long it will take to come on break even, whatever you are doing initial investment. Now, my point is here, if you look at once year, because sale is happening fine, but profit is once year, it may take around 100 years, once year of profit into 100. Say if it is at present, I'm talking about at present. Forget. Now you are doing this deal, no? So 100 years. It is not worth to invest for a 1 crore rupee and getting after 100 years your invested amount back. Then another question will come to in your mind along with your revenue and net profit. What is the net worth? Net worth means enter asset, whatever asset you have, asset excluding enter liabilities. So, so you will think of that what is the net worth of a business? Sorry. So let me clean once. So you will think of what is the net worth of a business. So if I convey you my property at Goa is valued 50 CR, say after excluding all my liabilities and everything, you will have a 50 CR in hand along with your 1 CR of profit. Then deal looks little fine. Okay, so you are getting a when you are investing 100 CR, a 50% you are getting a cashback. Now, if you really know that Rupak is not able to run this business, so that is why this top line is 1 crore, or if I do this business, no, I can increase crowd, I can increase occupancy, I can get a restaurant revenue and many other things, wedding, destination wedding, many things I can do, and I can make my profit once year to 10 year. Then it makes sense to invest. So one point is growth and how much we are getting back, how much, like at least like how much worth when we are investing, at least what in case everything goes wrong, you can sell this hotel at 50s here. You'll be in loss of 50s here. Now, when it comes to business, people don't evaluate all these things. People come straight in market and then they jump in figures. They don't look at any other points. Let me give some example that where I pick few things and which has really worked very well. So those are the thing. If I just share with you, it may help you to understand. So as on date, Mazagon is having 78K market cap. Market cap is nothing but that offer price which I was doing for this particular hotel. That is 100 years. Got my point? So now, if you come on next question, as a suppose I'm selling and when I have negotiated, I'll convey you. But as of now, if you look in this funnel, that now you are negotiating same. Now I'm selling Mazdog to you. So what is your question that what is the price? I'll say that it is 78,452 here. So second question, if it should come to in your mind. 1 second. What is the profit? Fine. Profit is 1,937 here. Profit is 1,412 here. Fine. As of now, 78K market cap, you are getting a 1,937 CR of net profit. Now, if you come on balance sheet, so you will be getting a 6,200 cashback. That is a net worth, reserve, and equity. Fine. They have a asset, they have a liability. So this is the net worth. So net worth of 6,200 CR. Now, now what we are getting after investing as of now from this particular business, 78K CR is their buying bid. I will get only 6.2K net worth as on date plus 1.93K CR of earning profit. So 2K I'll be get back. So it will take 2K multiplied with if sector is in favor of government policy and everything, money will flow, order will come. So it will take me around 29 years to if it as on date if I do this sector may do from 2K crore to 4K here, 6K here that we will discuss afterwards. As of now, in this session, we will not talk about when we are doing a negotiation. As of now, the what are the factors to be taken care of while in looking at a growth. So those are come will from you'll have to track the order book, you'll have to see their guidance, everything. As of now, at present, if you do, it will take around 29 years. What you are getting, 78K here, 78,000 crore minus 6 means 72K here is your risk. So you'll get back 2,000 crore, almost 2K here every year. So it will take 36 years, yeah, almost 36 years to get back your invested amount. So it is as of now. Since growth is there, next year it may post 4K here. Yeah. But as of now, it is not that lucrative or reasonable. Now, if I come on when I have last time when I have shared this particular business, let me give this example. So that time it was at 290 rupee. Now it is 3,800, say, or 3,900. So how much it has gone up? 3,900 divided by 290. So you can see that it has gone up by 13.5x, this much. So market cap also I can say that how market cap increase as price move, the market cap also move. How it will move and all, how to derive market cap, that also I'll come on a next session. So market cap is just a number of like whatever market price is going on multiplied with outstanding shares. If you multiply, if you come 1 second, let me clear that also with all of you. Say here it is an equity share is 1 second. equity share of 20.02 share. Can you see 20.02 share? Now multiplied with current price. If I do 3894, if you do multiply, you will get this. So current price and how many shareholders are there, how many people are there who are holding all this. So we are getting a this because every shareholder worth this value. So this much shareholders are there. So this is a market cap. So market cap is just a little tag we get no on our whenever we buy. So this is the price of a business they are asking. Now, when I said it, it has gone up 13.5x. Clear? So market cap also gone up 13.5x. Now look at then behind what happened that when I conveyed what was the deal for me. Deal was 78,000 crore divided by 13.5 if you do 78 divided by 13.5x if you do, you will get it was at 5,700 shares. Now let's do the deal again. That how that time I was looking at government policies in favor, all guidance, growth guidance, everything is in favor. Now I was dealing with this business in this way that whatever other logic, keep it aside. Now from a number point of view, I'm talking. One second, just wait because I'm just using this particular pen and explaining you. So it is taking some time. Uh, Now 5,700 here was a, if you come on even a balance sheet, if you come, so in 2022, the 2022, the around we are getting 3,656 plus 2. So we are getting a cashback of 3,800 against market cap of 5,700. Fine. And if you look at the profit and loss as well, so profit and loss was I'm getting a every year 600 here. So here Rupak is asking from you 5,700 here, where you are getting a net worth cashback on a first day itself 3,800 here. Now block it. And also you are getting, now you need to recover only 2,100 here from a business. And that you can recover even if they go flat within 4 5 years. Forget about their growth and everything. So it is very reasonable. No, that you are getting a very cheap, undervalued business. So sometimes no, unless you look in this way business, always you will be looking at a complicated direction. And definitely keep in mind that whenever you are selecting a business, they should be supported by a continuous, at least consecutive 2 quarter growth. And how to look at that also, I don't want to just continue this session, make it bigger unnecessarily, and I'll convey you on a separate session that how to look at numbers. Now it is a fair deal when you are dealing at 5,700 crore. If you look at a cash reserve of 3,000, so reserve is a very important part of doing a valuation because if no one look at those part, uh, they just simply look at sales and other thing. Whenever you invest, you think of whenever even 100 rupee or 100 share you invest, you think of that I'm investing 100 share. How fast I can like get back my 100 share? Otherwise, it is not a good investment. So whenever you do, margin of safety is very important. From a margin of safety point of view, as an investor, the main part is whenever you look at, try to look at a reserve and any business which are having a tremendous growth, then also within 10 to 20 years, we should get back your amount because you are getting a good reserve because the company will grow. But at least 10 years, if it is 10 years or less than 10 years, it is absolutely undervalued business. And if you are getting a tremendous growth driven thing, their number will come future. And that time you will see the growth, and that time reserve will increase. So then you can give them a 20 years time, fine. Otherwise, try to look at businesses. Here in this case, it was a 5,700 share business. We are getting a 3,800 share cashback as reserve. Reserve means you are having that asset. You are paying 5,700. Suppose you have a 5,000 share in your pocket. So you are paying it. You are getting a cashback of 3,800 share. Now also worth of 600 crore every year earning you are getting. This is the main thing. This is the cherry on the top. Whatever extra you will get, no. So altogether now, since you have this, only it will take. Even if you think in this point of view, no, I will recover. Even if it's doing a flat 600 year, I'll recover within 10 years. I'm getting a cashback, getting something such 600 year revenue. Government policies in favor. Just float. As of now, it is not reasonable. The same thing, it's taking a 36 year, which I'm doing it within, like, if you look at, no, within 10 years, we can, like, 3,800. So let's say it is a 2000 here. 2000 divided by 600 means within 3 years, 4 years. And if I remove reserve, because entire thing we cannot sell, maybe some assets included and all. So in that case, you'll have to think. And always, whenever you look at, no, the nature of business is also important, because in IT company, the reserve may include many things like a computer which are not having any value, or a scrap machinery of a company. So net worth to be evaluated. Net worth, which you'll have to understand what is the net worth. But whenever you negotiate, if you look at, no, reserve consists of the company will be every company will be having a different set of assets. Some will be having a plant and machinery, some will be having a computer and other things. You need to look at that what you are getting net worth as a, like, when you'll be selling, the company get bankrupt and everything. So whether you're holding a land, building, all this thing or not, these are the real asset which you can sell and actually make money, or a patent right or something. No, if you means really it's having a worth, then in that case you may get some money recovered. Otherwise, if you get a computer is not having a value, if you look at only business, so in that case, for IT companies, always you need to look at from a point of view of how much PAT they are generating, how much cash they are generating, not only reserve. Reserve is an additional point in that case. Fine. So whenever you do know, look at the how fast you are going to recover the money. Compare with the PAT, cash flow, and everything. Cash flow in this nature of business, no, cash flow may vary. One means it may vary means every year, because they are not selling a FMCG item. So then and then they will not realize cash. So it will be up and down, and it will be some year it will be very positive when they are delivering a goods. For infrastructure stock also it will be like that, because the real estate company, 1 year they do all real estate building construction, and next year they'll be because that time cash flow from operation will be negative, and next year when they'll be delivering, the cash flow from operation will be positive. So we need to understand the nature of business. That is also I will cover on my different session, how to uh, analyze a different sector. Now I'll explain another sector as well. Now come to tree. Now all are getting mad about a tree. Now all are chasing tree. But if you look for a few things, let's take an example. This sales dr- gone down, but if you look of their price, it's crazy, and people are not having any clue that why this particular business has gone up, like from this price to from this to this. So this is crazy from 30, 40 level. I actually shared in this zone from there to almost a 900 rupees level. How it has gone up. Simple thing. If you look at no, it has gone up almost at 25x. When I shared this business, it was at a market cap of 489 CR. This is the MRP. Let's understand from a MRP point of view. So when I was negotiating, I was thinking that okay, government is doing a revamp of entire energy sector. So for that, transformer also entire sector is will be a very integral part, and it is also require a reform and many other thing will come. Green hydrogen transformer that time it was not there, but for energy saving, for electrification, transmission, distribution. So this is very important part. So why not like a company available at a 489 here with a what deal I am getting at a higher than market cap? Yes. If you look at company is doing a 1300, 1100 here, sorry, in 2000, in this time 1158 here. One second. 1158 here of sales. Deal was 489 here and getting a reserve of I'm getting 343, say 350 for this in rounded off 350 crore of reserve. So again, say you are asking that you want to buy a business. I'm saying that my business value is 489 CR. So next your question is what is your top line? Fine. What is your profit? I'll convey you that okay, my profit is around that time 14 CR. Okay. My profit was 14 CR. So I'm asking my rate is 489. It's remove all other unnecessary thing. Yeah. So 350 here reserve I have, 489 here I'm asking, and you are getting a sales of 1158. The company's sales is in uptrend. Quarterly profit was also in uptrend. Everything was uptrend, and I'm getting a deal at sales of like a profit, net profit of 14 here. Now I'm getting a cashback straight away. In this kind of industry, it's a heavy industry. So in this sort of industry, I'm getting a 350 share of something means we are getting a hardly 140 crore I need to recover. So 14 crore company is doing within 10 years I can recover. And since the growth is in favor, so I may recover within a half period, 5 years. Almost, because if growth would be more or less 15-20%, so the CAGR calculation, if you do know, so you'll understand that this particular thing after 3 years, maybe 28 years, every 3 years, they'll be doubling their top line. If you now look at some 14 to it has gone up to 47 here. Now, now the deal is so much like as of now, it is not lucrative. As of now, it is very expensive since growth driven. So whenever you get businesses in this kind of valuation, always you should pay attention if you understand a business properly. This is the simple valuation metrics which people don't look at, and they go for very complicated analysis initial phase. Our focus should be understanding a business, understanding promoter quality, all these things, not looking at only numbers. Only we need to keep in mind if our country is growing at a 7%, inflation at 7%, At least I select a company which are growing at a 15% growth top line. Clear? Till now, I hope it is clear. If any doubt, we will discuss on a session. Now, let's take any present example which we are discussing as of now. Any stock you can say about that, whether that particular business on live session also we can discuss. But if you look at Home Infra example recently, what we have shared in Home Infra, if you go in Home Infra, see in Home Infra, I conveyed at the level 90, even tried at 60 level, but he didn't get because Vijay Kedia sir has taken entry. So that time the market cap was up 50%. Yeah, because 90 rupees price was 90. So it was available at a 950 crore. Even as of now, it is very attractive, but means understand that when to add. If you understand money flow, as I conveyed you, you can pick this business very early. Now look at a business. Yeah. So 950 crore market cap, getting reserve of 700, 700, say, let's take 700 and profit of 47. So this is the, as of now, what they're presenting 950 crore. You are asking from me 700 here. I'm getting a cashback. Also, I'm getting a 47 profit. So as an investor, I will recover. I need my risk was only 250 crore, so which I'm getting within like a 6 years time to recover my entire money, which is very reasonable valuation. So evaluate first margin of safety, whether you are buying something very costly or not. Then we will talk about growth. I hope whenever you look at no business proposition now onwards, you will look from a point of view of a market cap. You will look at what is the cashback you are getting, that is reserve, nature of business, everything you should look at, and the profit, what this particular business is generating, and how fast you are going to recover. Hope this will help you. And for further no session related query, I will discuss with all of you. Okay, thank you.